Good afternoon. My name is Stevenson Lindor with Self-Paid University, and today I'll be going over how to properly draw up supply and demand zones on your chart. So first things first, I'm going to bring up chart, and we have here USD JPY. Now, when locating supply and demand zones, you really want to utilize the higher time frames for the simple fact that the higher the time frame, the stronger the analysis. Whether you're using indicators, whether you're using, trend lines, support and resistance, and supply and demand zones, the higher the time frame, the stronger the confirmation. So I preferably like to use the 1 hour and the higher time frames. So right now I'm on the 4 hour. And what you want to look for is supply and demand zones. And how you look for that, well, one, you want to understand what are supply and demand zones. Supply and demand zones are areas in the market where you expect basically a strong reversal. So demand being where buyers are situated in the market, and supply zones being where sellers are situated in the market. So once market price reach demand zone, you can expect buyers to take over price and push the market towards an uptrend. And supply zone is areas where price reaches that zone area, and sellers take over the price and start pushing market price towards a downtrend. All right. Now, supply zones can be located by looking for like swift big drops away from either a single candle or a small consolidation structure, commonly known like as a base. So the base consists of like a few candlesticks in a tight sideways range, or what you're looking for is like market exhaustions, like big spikes, and then you see big pullbacks, and then you see the market just start to drop. So one area is right here. So you see this big uptrend, market does a slow downtrend, you see market exhaustion, and then you see this big drop right here. So you got your little base, and most importantly, what I like to look for is engulfing candlesticks. So if you notice this big bearish long candlestick, see how it engulfed the previous candlestick, which was bullish. So this is a strong area of supply. So what I do is I go to insert, go to shapes, go to rectangle, and you just want to mark this area as supply. I like to usually take the wick zones and then boom, mark this whole area as supply. So every time market price enters into this zone area, expect market to reverse and go on a downtrend. And as you can clearly see, what happened after the initial drop, once market price got up in here, as soon as it entered, boom, went on a downtrend. All right, so that's a strong area of a supply zone. Now, finding a demand zones are found when the market makes a large move up from a single candle or base. So exact opposite of a supply zone. And right here is one good example. So as you can see, you got your market exhaustion. So market exhaustion is price can no longer go on a downtrend. So as you can see here, price moved down and then buyers took control, and then you see the quick pullback. And this candle ended up engulfing the previous candlestick, which was the bearish candle, and then went on this big uptrend right here. So what I do is same thing, insert, go to shapes, rectangle here, and then you really want to get that entire wick plus the previous candlestick, and then you want to stretch it all the way up to current price. So every time market gets in that zone, expect an uptrend. And as you can clearly see, once market price, after it hit this zone right here, came down, touched this zone, went on an uptrend a little bit, came down again, uptrend, down, up. But every time it touched here, you expect an uptrend. And I expect market price to eventually get back up here into this zone. And you can literally trade from zone to zone. So what you want to do is when market price gets in here, you can either wait for it to touch. You can literally enter your sell or your buy as soon as market price touch, or you can wait for it to get in a little further, depending on how big the zone is. The main thing is whether where you place your stop loss. You always place your stop loss outside of the zone. So in this case, for a demand zone, so let's say you entered, this would be the minimum of your entry. So you got your minimum, your middle entry, and then your final entry for a buy towards the end of the zone, depending on how big it is. And then your stop loss would be about 10 to 30 pips outside of the zone. All right. So my stop loss, if I'm buying on here, my stop loss is around somewhere around this range. All right. So it's outside the zone. And the same thing applies when entering in the supply zone. So when market price comes back in here, and let's say you get in for a sell here, the moment it touches the zone area, your stop loss want to be outside of here. So you have enough wiggle room just in case the market decides to, take the full length of the zone area before dropping. And now you can literally just trade from zone to zone. All right. So this is what you want to practice. So once again, you're looking for market exhaustion areas. You're looking for big breakouts in candlesticks, like candlestick like this, candlestick like this. So we zoom back, find it in other areas. It's a big, this would be a supply zone right here. Look at this. You got your market exhaustion. You got this candlestick engulfing the previous one, this bullish candlestick. So I can mark this up. So this would be something like this. And boom. And then you want to take it across. And then, like I said, as you can see here, boom. Every time market came in and went on a downtrend. Now, in this case scenario, you see how market, that's why I said you want to usually place about 10 to 30 pip outside of the zone area. So there's a possibility you might have got stomped out, but as it transpired, look, market price fell down. Boom. All right. So this is what you want to practice. Like I said, you're looking for big breakouts in the market. You're looking for big pullbacks, and most importantly, you're looking for those candlesticks to engulf the previous candlestick, and it has to be preferably the opposite pair. All right. So this was just a quick video on drawing up supply and demand zone. I hope this helped. Hope everybody enjoys. Talk to you soon.